All right, Facebook, good afternoon and welcome back to Real Estate Talk Live. This is Tony Martinez, joined here by my co-host Omar Arcia of the Arcia Law Firm. Omar, happy Wednesday, brother.
Happy Wednesday, Tony. We're back here again on Facebook Live to chat about our favorite things, what we're passionate about, and hopefully we'll have a lot of folks that are watching ask us some questions.
Yep, basket weaving. That's one of our favorite passions. This is not the basket weaving.
Basket weaving. No, that's the other. That's the other
real estate.
Website, yeah.
This one's about real estate. Okay, so listen, folks. Here's the deal. Some of you have been with us since the very beginning, or you've been with us before, so you know the format. It's kind of free flowing. We want to take your questions, your comments, your feedback while we're on live. Many of you are going to see this after the fact, and we still want you to go ahead and use the format to input whatever questions you want, because Omar and I are constantly monitoring it and providing feedback. So let me tell you a little bit about what's going to happen today. We're going to free form like we usually do, take some questions that have come to us off air regarding legal issues and contract issues in real estate. And then about halfway through the show, we're going to go and bring in a very special guest on a topic that a lot of you are going to find very interesting. So we have Vince Rodriguez here today, who is with Caliber Home Loans. He's going to be talking about the mortgage industry. We're going to talk about mortgage rates, what's going on. He brought his crystal ball. I saw it. He's going to look at his crystal ball and he's going to no, he's not, but he's going to go ahead and tell us what's going on with the market right now.
Well, and listen, I get calls every week. Every week I meet with clients who ask me questions regarding, well, what kind of mortgage should I consider? What kind of mortgage program do they have available? Do I qualify for this? Do I qualify for that? And I give them Vince's card.
Yeah.
I say, listen, mortgages and whether you qualify for this or that you need to talk to a specialist.
Yeah, absolutely. Vince is one of our preferred lenders here at Xtreme Realty team. He is also a friend, someone whose integrity and friendship we cherish. So you're going to find his information great. Make sure you have your questions ready for him to go ahead and type in. One of the things that I would like to go ahead and propose to our audience today is we'd like to get some feedback from you in terms of, there's no doubt we're going to continue with the show. What we're now having discussions on is, do we continue with the Facebook Live format? Which I got to tell you, folks, when we first started this about 2 months ago, I had more hair. Because anything that you do, Facebook Live, if it's not the internet going down, if Facebook doesn't like us that one moment, it's someone having a loud conversation behind you, you name it, it happens. So we're wondering if this is the right format to continue. Or do we do a really nice, polished, pre-recorded, high-quality video, and then, of course, we can put it out on Facebook and boost it and everything else.
Right, we publish it on the websites, and we let folks have access to it. We put it on YouTube. We can provide all that information to the folks, and then they can certainly provide us with their feedback and their questions, because most of the questions that we actually field, we actually do it the following show. A lot of the folks will provide some questions during the show itself, but most of the questions we'll field it after the show. We want to hear back from you. We want to hear whether you'd like to just have a more polished format, more structured format, or whether you like the Facebook Live format that we have right now, and whether you want to keep it that way, because we're guided by you guys. This is your show. We're doing this so that you guys can be educated and you can have more information regarding the topics that we practice and we love so much, real estate and law and all the other stuff associated with it.
Yeah, so we're going to leave it completely up to you. Now, again, one of the things that drives us nuts, I know, is I hope to give us feedback too on the quality of the sound. We're trying to improve the quality of the sound. I know that I don't know if it's me, but from my image, that looks kind of on the dark side, right? But what the heck? Maybe that's the charm of this. Maybe the whole charm of the Facebook Live is that it's not so...
Yeah, it's not so polished.
Yeah, not so polished. And in other words, it is what it is, right? Yeah. This is not what we do for a living. I sell real estate. I run a real estate company. You're in the legal profession, but we're using this medium to reach out to folks, because there's always someone out there that's going to say, well, you should have done it this way. I go, yeah, but at least we're doing something.
Yeah, but we want to hear back from you guys.
Yeah.
So that's the key. If you feel that it would be a better format to do it, pre-recorded, and we can put it up on the website At the same time, we would put it up on Wednesdays at noon, and you would have access to it. We can do it that way, and we can make sure that you have a more polished and a smoother flowing program with no time breaks. I mean, that's the other thing in Facebook. Sometimes it times us out, and sometimes the Wi-Fi connection doesn't work out, so it knocks us out. So we just want to hear back from you guys. On those issues.
So let's do this. So in an impromptu thing, so listen, as part of the production crew, let's get Mati to come out here and move some of these lights around a little bit, because just from what I'm seeing here, it's kind of on the dark side. So let's go ahead and bring our crack production crew to move this around. So listen, you had something you wanted to share.
I did.
About short payoff versus short sale.
Yeah, I mean, I've had I like to talk about the stuff that comes in and out of my office on a regular basis, because I feel that's kind of like the pulse of what's going on out there. Right. So one of the things that's going on right now is I'm kind of seeing more and more short payoff approvals by banks and by lenders with our clients that are in a foreclosure situation. And a lot of folks confuse short payoff with a short sale. They're two very, very different concepts, and you shouldn't mix the two together. I've had clients come up to me and say, well, the bank will take $150,000 to pay off the loan. Does that mean I can sell the property for $150,000? No, that means the bank is offering you to find money to pay them $150,000. That's the way that it works, so you can keep the property. You have to understand that banks and lenders and servicers get reimbursed differently when it comes to short sales as opposed to short payoffs. And the investors will approve one thing over the other. A short payoff is when the bank allows you to pay less than the amount that's owed to satisfy the debt so that you can stay in the property, so that you could keep your property. And most of the time, the bank will have as a precondition to the short payoff that you cannot transfer or sell the property. Now, a short sale is just the opposite. A short sale is you have an outside third party that's buying your property for a reduced amount less than the amount that's owed to the bank. And in that case, obviously, you can transfer the property to a third party. As a matter of fact, the bank will require that you transfer the property to a third party that has no affiliation to you by marriage or by family structure.
Sounds good. Listen, I have a question here. I don't think that needs to be turned on. That's probably why we're not getting a whole lot from there. So, one question on a transfer by quitclaim deed. Does this count as a sale for the lifetime profit for $500K joint for couples or not? I think that's dealing more with a tax-related question, right? That's not going to be a question, or maybe you got this. But my first reaction is is that more of a tax professional question, or you want to take that one?
Yeah, the first part, it sounded like a real estate question, and then it kind of evolved into kind of like a tax break type question, which certainly I'm not an accountant. I'm not a CPA. I don't pretend to be. That's my disclaimer. And anything related to the transfer itself is very different from whether or not you can take some kind of tax benefit out of it. But if you want more guidance on that, I mean, feel free to send me an email, and I can certainly help you with maybe putting you in the hands of someone that can give you an answer to that. My email is info@arcialawfirm.com, ARCIA lawfirm.com, and I'll be more than happy to respond to that question more in depth off the air.
Yeah, and I back to whether we stay with this format or go pre-recorded, a lot has to do with, are we getting questions while we're live? If most of the questions are coming after the fact and everything else, then maybe that's speaking to us as well. So again, your feedback, the direction of what format we're going to go, is going to come from you. So we want to hear from our audience. And also feedback on topics. Are we talking too much about one thing and not talking enough about another?
That's a great point. I think that we really need the audience also to direct us on what kind of topics they want to hear more about. I mean, this show's not about us. This show is about them. So if the listeners and the people watching out there, you have some questions regarding a particular topic, or you want us to really delve into a topic, we had some people ask us to talk a little bit about FERPTA, so we did that. We did that show. We had some questions regarding some other topics, and we addressed those topics on the air. So if you have a particular topic that you want us to address and you want us to address in detail, let us know, and we'll be more than happy to address that. And that allows Tony and I to kind of meet and discuss and really develop a really well-structured show so that you get as much information as possible regarding the topic you want to hear about.
Yeah, and the other thing too that'd be great to get some feedback on is we really are presenting the show in 3 different formats right now. There is a Facebook format, but right after the show, we quickly upload it into YouTube. So we also have our YouTube channel. And now we also have them on podcasts. In fact, please jot down this website address. You're going to love it. realestatetalklive.com. realestatetalklive.com. And that takes you right to where our podcasts are located. Right now, they're there on YouTube as well. I've already submitted the application for Google Play and Stitcher. And I got to tell you, without even promoting it, we're getting a slew of people that are listening to the podcast.
Well, I love podcasts because if you don't have time to watch the show, maybe you can hear the show.
Right.
Most people have their phone linked up to their car, so you just pull up the podcast, and as you're driving to work or driving to meet a client, you can listen to a podcast. And you can listen to maybe half of it on the way over there, half of it on the way back, and boom, you've got a whole program that now you've listened to and participated in. And then if you have any questions that emanate from that, let us know.
Yeah. And I think the other thing that makes our show unique is because we are tailoring it to 2 different audiences. One is the real estate agents out there. This has become a de facto training for them. And also for consumers. A more educated consumer is going to make better decisions, whether buying, selling, investing, renting. So you'll see it freeform. 1 minute we're talking about contracts and telling real estate agents, don't do this, or that's going to get you in trouble. Next thing we know, we're talking to a consumer and saying, hey, buyer beware. Let's go ahead and make sure that these things are addressed. Got something that came up just a couple of days ago. I think there'll be of interest there. And that is that a particular property went into an estate, okay? And the owner passed away and then went into the estate, and the property is underwater. And I was asked, hey, the bank is talking about taking the property away. What can I do? I go, do a short sale.
Absolutely.
Absolutely do a short sale. So, the owner doesn't have to be currently with us. The owner can be an estate.
And that's a very quick short sale because you don't need any financials. I mean, the borrower and the former owner is passed away, is deceased. So the bank is not going to request any financials at the same level as someone who was actually employed or has current assets. Now, they may request some information from the administrator of the estate if there's significant assets in that estate. But if there's no assets in the estate and it's a straight deal, it's going to be a quick short sale.
Right, absolutely. So in that scenario, it just makes perfect sense because you're right. I mean, what can the bank do? Right? It really comes down to, does the estate have, they're going to look at the estate in general to see if the estate has the resources to pay off that loan. So in essence, the estate has to qualify for the short sale and be insolvent or not be financially able to meet the obligations.
Right. I mean, and a lot of these situations, you have an estate that just barely has enough to cover the ongoing or the necessary expenses of the administration itself.
Yeah.
So I mean, depending on what kind of estate you're talking about here, some of my quickest short sales have been situations like that. Along the same vein of someone who has passed and is a borrower on a loan. A lot of what I'm finding now is that a lot of lenders and servicers in foreclosure proceedings are neglecting to name the estate or any guardian ad litem representing the estate or anyone associated with the estate, and is going to foreclosure without naming that estate. That is a big faux pas and will allow you to vacate any foreclosure judgment, will allow you to go back to the bank and say, listen, you forgot to name a critical party to this lawsuit, which is the estate of the borrower. And we've actually reversed many final judgments of foreclosure due to the fact that the bank, the bank's representatives, really the attorneys representing the bank, failed to name the necessary estate or the administrator of the estate.
Okay. So in terms of any other interesting things that happened to you this past week that might be of interest to pass along to our audience?
Another really interesting thing that happened this week was I had a client that I represent right now in a real estate transaction. They're first-time home buyers.
Okay.
Which is, I was really excited about the fact that I have first-time home buyers seeking counsel to represent them in the transaction. Can you believe that? And I said, listen, you guys are making probably the best move of your life.
Right.
Because 99.9% of first-time home buyers just kind of wing it and do it on their own. And then after the fact, they go, wow, we should have done this, and we should have done that.
Right.
I wish we could have done this. I wish we would have spoken to an attorney about not having to pay this closing cost and that closing cost.
Right.
Or sign that addendum. They were absolutely clueless as to, how the inspection worked and how this worked and how everything worked. And I'll just kind of give you one tidbit that kind of emerged from our first conversation. Obviously, I can't disclose anything in particular that transaction, but they indicated to me that they're doing it. We're pre-approved for the loan, and they're doing an appraisal of the property.
Okay.
And the seller told them that if the appraisal comes back higher, we got to sign contract. If the appraisal comes back higher than the contract price, well, we have to change the contract price to the appraised value.
Oh yeah, sure. Why not?
And they absolutely believed the seller. Because the seller was speaking to them directly, not the seller's not the listing agent.
Gotcha.
But the seller was telling them, hey, if the appraisal comes back higher, we got to switch the price to the appraised value of that property. And I said, absolutely not. You struck a deal, and if you struck a good deal, then they have to live by that deal. If you struck a bad deal, then you have to live by that deal. So it's what's good for the goose is good for the gander, and the contract price is the contract price, whether appraisal comes back less or more than that price.
Yeah, and in some respects, I can almost understand kind of what that seller is thinking, because the way the contract is written, it favors the buyer, because if the appraisal comes in lower, the buyer can get out.
Right.
And then if the buyer chooses not to get out, the price can be renegotiated. And if you don't agree on anything, the deal's over. So they're hedging their bets.
Right.
What they're trying to do, and I can almost understand it, it's just not the way things are done.
Exactly.
Right.
There's no provision in the contract that allows the seller to exit that contract because he made a bad deal.
Well, let me ask you something. If they just add that to the additional terms at the end and it's agreed upon by both parties.
And believe it or not, before these buyers came to see me, they were ready to sign
do that.
An addendum. Because the property did appraise like $30,000 more than what they agreed upon.
That's insane. Yeah, so you caught them in time.
Absolutely. Thank God. I caught them in time. I explained to them that that's the deal that was struck, and the only thing that would happen is if the appraisal came back less than the sale price, then you can have the right to exercise your right to terminate that agreement because you wouldn't qualify for the financing.
Well, I have a question for you. So when, in your perfect world, should a buyer enlist, well, let's just put it this way. Sellers and or buyers always have the right to engage an attorney to review the documents and the contracts. But you typically don't see how often are you getting involved at the time that the offer is being written or presented, or are you getting involved after it's been agreed upon, and which is better?
Yeah, 9 times out of 10, a buyer will come to me, a buyer or set a buyer will come to me after they've already got a written contract, and they're really coming to me to make sure that everything goes smoothly at the closing.
So you can't impact what's already been agreed upon.
Exactly.
Unless they're still within the inspection period and you can cancel, and at that point use that leverage.
Exactly. Now sellers come to me before contract. So whenever there's a seller, and most of these sellers are commercial sellers, they'll come to me before the contract, and I'll usually draft the contract or make some changes to the contract as necessary to make sure that it comports with what the seller is looking for as far as the deal is concerned.
So let me ask you, should a real estate agent, because we're almost trained at birth, that the minute an attorney enters the deal, your job is to kill the deal.
That's certainly the public perception, right?
Or the industry perception, right?
Industry perception, and I think what attorneys are like right below congressmen and the other. It was,
Keep going.
It was,
now, let's not insult some of our audience. Let's insult congressmen all we want, but the rest of those wonderful professions out there, we'll leave them alone.
As far as our popularity rating, where like attorneys are right below like a slug and a cockroach, right? But in any event, no. Most attorneys out there, believe it or not, are looking to generate fees and generate time, and the only way they can do that is by creating problems in a deal. My favorite part of any deal is to make it go, is to make the people collaborate,
right,
so that we can close the transaction. I'm actually upset when the transaction doesn't close, because my goal, just like it's like a race almost.
Sure.
Both parties are kind of running towards a common goal, and I would hate for attorneys to go in there, and I've seen this happen many times, for attorneys to go in there and they basically blow up a deal over really nonsensical issues. And it has to, it may have to do with the financing, it may have to do with some deadlines, it may have to do with inspections. I mean, there was a hearing in court yesterday where there was 7 attorneys arguing over a commercial deal, and they're each having their experts check this out and check that out. The deal blew up, of course, but now I'm seeing there's 7 attorneys, each billing at least $300 an hour, arguing over this real estate deal. And that's that's certainly not what our firm is about. That's certainly not what I'm about. Tony knows that. I've espoused that many times to our agents and to my clients, that I want to make a deal go, and I'll look for ways, even out of the box, to make sure I can make that deal happen.
Got it.
There's some deals that you can't make it happen no matter what you do, but my goal is to make a deal happen.
Okay, a couple questions here before our segment is up, and then we're going to bring Vince up here to talk mortgages. Buyer closes on the sale of a house. The seller left some things in the house. Can the buyer immediately lay claim to those items?
It's my understanding that when you sell a property, unless the contract says otherwise, anything remaining in the house is the property of the buyer. The moment they walk in that house, the moment you close on the property and its contents, unless it's agreed otherwise by the party. So it's very important that you remove all the contents in connection with any real estate closing. Now, we had a closing just the other day where the seller didn't care about leaving all the stuff that was in there.
Which is not cool either if the buyer doesn't want it.
Right. So what they did is, listen, you can trash everything that's in there. Buyer was like, listen, I didn't really buy this house to start demolition and take everything out. So go in there and take everything out. So the real estate agent, very proactive, found a company that went in there, like one of those pick up your junk type of thing. Went in there, cleaned out the house for like $500, and the house was sparkling clean. Buyer was happy, seller was happy. Done
right.
deal.
You know, you bring up a good point, because this often happens, especially with newer agents. Newer agents, it happens all the time that come to the walkthrough, the seller's stuff is still there, okay? And it's supposed to be gone. And depending upon the mentality of the buyer and seller, it may have been a smooth transaction and they're working closely together. Or it could have been very, very, anger-filled, and they want to do each other. But listen, you are the person that's going to make it happen. So if the seller left a bunch of junk there, the buyer doesn't want it, you know what? You have to have resources available, get a hold of the pros, have them go in there, take the stuff out.
Right.
Be proactive. Be proactive. And that's just kind of like, that's just real estate 101. I mean, last week we talked about how one of our deals, the buyers who happen to be real estate agents had gone in and painted the property prior to closing. Well, here to report that the property actually closed. Okay, thank God it closed. However, the seller is still considering filing a complaint against this real estate agent / buyer. My personal opinion, they should. They really should. That was just completely over the top.
And if they don't, then that particular real estate agent will continue to do things that are perhaps unethical or unwarranted until something worse happens.
Yeah, absolutely. So we're going to wind down, and maybe there's a couple of the questions that are coming up and that you can maybe take offline and everything here. But folks, If you're just tuning in, you're watching Real Estate Talk Live. This is a weekly Facebook show, which is dedicated to the consumer and to real estate professionals. We're out here answering contract-related questions, real estate legal questions, anything you can think of, we address here. And Omar now is going to give up his coveted seat because he's got to go out there and help some clients. And we're going to bring in Vince Rodriguez from Caliber Home Loans to talk about the mortgage side of things. But how can they reach you? Yesterday, in fact, I had somebody reach out to me and say, I need a commercial attorney. I have a buyer, $5 million deal in a commercial. I go, call my guy. And I sent her your information.
Absolutely. And that's the best way to do it. I mean, if you have any concerns or doubts whether or not we could handle that particular transaction, if we can't handle the transaction or the legal matter, we're going to put you in the hands of someone that's going to give you the very best representation. I've been doing this for 23 years, and along the way, I've met really bad attorneys, and I've met really credible and reliable attorneys and counselors that are good in the fields that they practice in. So give us a call. The best number to reach us is 954-437-9066, 954-437-9066. As you know, I meet with my clients face to face. I'm old school. I like to talk through all the different issues, and I give personal attention to all my clients when they come in. You can also check out our website, which is rcialawfirm.com, ARCIA lawfirm.com. You can make your appointment online and certainly set it up that way. Finally, you can send me an email if you have any questions or concerns at info@rcialawfirm.com, and I'm going to leave you here with one of the best in the mortgage industry. We've done seminars together, and he's going to be able to illuminate all of our audience on all the.
But he's not part of the whole Illuminati thing, right?
No, none of that.
Okay, no, he's going to illuminate, but he's not Illuminati.
Right.
All right.
He's Hispanic. He's not Italian.
Okay, you can't beat an introduction like that, Vince. So listen, we're gonna just do things. Come here, come on in. Just don't step on the cord. Say hi and bye to Omar. Folks, if you have any mortgage-related questions, now is the time. Look at this. Oh, it's this. The handing off.
Personal attention.
Oh my goodness, he never treats me like that, brother. God bless you, man. I'll see you next week, okay?
You got it.
Actually, next week I'm on vacation, so we may not have a show, or it might be the best show ever without me here. We'll talk later. All right, listen, Vince, welcome, buddy.
Tony, thank you for having me.
All right, listen, Facebook, Vince Rodriguez, Facebook. Hello. So, listen, go ahead and tell them a little bit about yourself and the company you're with.
Sure, no problem. Everybody, my name is Vince Rodriguez. You may follow me on Facebook under Vinny Rodriguez. I'm partnering here with Tony here for Facebook Live. I'm with Caliber Home Loans, and my NMLS ID number is 325209. I have to say that.
Okay.
So we just opened up our office in Weston, at 1040 Weston Road, and I got a great team of associates out there. I have Isidro Gonzalez, Alfredo Aguiar, Neetu Singh, Joe Espalosin, who just recently joined us.
Hey, did you have to mention all these? I mean, are they paying you to mention?
My team.
Okay.
Claudia, Yamal.
Anybody else you want to bring up? I mean, what about your leader? Your leader there?
My leader, Peter Kalia. So shout out to my team over there in Caliber. So we're a direct lender locally here.
Yeah.
We're kind of like, if you want to say, we compare ourselves to the Bank of America's, but only in the mortgage industry. We only do mortgages, so we don't handle any savings account, checking accounts, or anything of the credit cards. We specialize in mortgages and only mortgages, which allows us to give the one thing that clients really need in a real estate transaction. Think about it. It's one of the biggest investments that they're doing in their life. So we provide them with the highest level of service, competitive interest rates, and that, just like Omar talks about, that hand-holding, the old school type of touch where we guide our buyers from point A, from the pre-qualification or pre-approval stage, all the way to closing. So the service level is top-notch. The rates are competitive with the big banks. So we're offering great rates, great service, and we're closing quick.
So let me ask you this, Caliber, because I know that you're making the local argument because you're based in South Florida, but you're a national lender.
We are.
And you've grown significantly. Where are you guys ranking right now as far as nationally?
Right now, nationally, in terms of correspondent lenders, not correspondent lenders, but direct lenders, we're number 2 in the nation right now.
Wow. Okay.
We are able to originate throughout the U.S. We are a national company, and I'm proud to be part of this company because we're growing at such rapid pace and we're taking such huge market share out there.
Yeah.
The last time that we spoke in one of our meetings here in the state of Florida, in purchase mortgage market share, we're ranking in the top 5 behind the big banks that are, dealing with billions of customers. So that's a huge feat for us as Caliber in the state of Florida and nationwide. So I'm very, very...
And how long have you been in the mortgage industry yourself?
I've been in the mortgage industry 17 years now.
Wow.
17 years and counting, 2 years now with Caliber. Before I was with one of the bigger banks. But nonetheless, been in the mortgage industry now 17 years.
And you're running the Western branch, right?
The Western branch, yes.
Awesome.
Yes.
Awesome. So listen, as far as any questions you have, go ahead and get those typed in. What we wanted to talk about is, again, audiences, both real estate agents and consumers. What are you seeing right now? What are some of the challenges that people are facing with getting financing in the environment that we're in right now? And to kind of piggyback onto that, are we seeing things loosen up a little bit? Have any changes? So address the challenges right now with getting a loan in today's market.
The biggest challenges that we're seeing right now in today's market is, if you want to call it, and again, we're not speaking for my team in particular, we're talking about blanket type of...
Right.
Is consumers not being really informed about the entire mortgage process.
Okay.
They're just really quickly working with a loan officer and not knowing what to do, and they're just getting the pre-approval done and moving along and trying to find a home. A lot of things that need to be explained, especially to the first-time home buyers out there, and even to some of the people who have purchased before but haven't bought in the last 3, 5, 7 years. A lot of the guidelines have changed.
Okay.
So, challenges with cash. Believe it or not.
How can you have a challenge with cash?
Exactly. That's the thing.
You need 2 forms of ID when you're paying cash, right?
Right, but over here, cash in the mortgage business, cash is not king, right?
Okay.
So we have people who are still having mattress money under their mattress, and wanting to use that for the transaction. That's not eligible funds for that.
So you need seasoning.
They need seasoning.
For how long is
At least 2 months. So they deposit it into their bank account and keep it in there, let it marinate for 2 months, and we're
so that's important, because that happens all the time, whether you're a consumer or a real estate agent lacking in experience, is when you are asking to someone to verify that they have funds available for the purchase, down payment, closing costs, whatnot, that you go ahead and see where that money is located. Exactly. Ask them, where's that money? Exactly. Okay, let me see it. And the person says, well, I have it saved somewhere.
Under the mattress.
Under the mattress. Says, okay, so guess what we have to do? You're going to have to open up an account or get it into account and let it sit there and marinate for a couple of months before we enter into a real estate transaction.
Yes.
Okay.
Also, some of the challenges, which are some of the basic things that we always talk about when our team meets with buyers, is and it's funny because one of your agents has the top 10 thou shalt nots list.
The 10 suggestions, the 10 commandments to what you don't do when you're buying a house.
And one of them, believe it or not, which we've been having a lot, is people going out and applying for these credit cards and transferring balances, thinking that, okay, if I can go ahead and transfer 3 or 4 of these smaller accounts that have $25 minimum payments on them, and they're transferring them on to bigger line amounts, that payment now sometimes has tripled on them. Instead of paying $25 a month, now they're being hit with $150, $200 a month when they combine all of these balances onto their credit cards. We're seeing that challenge as well.
One of the things that always kind of gets to me is I can forgive the consumer so much because that's not what they do for a living. But it's no excuse when you're working with professional real estate agents and professional lenders that the communication is not given. Right. And that's why we do love that form that we encourage our buyers to actually sign that says, no, you don't go buy a new car. Right. No, you don't buy a boat. Right. You don't change jobs. Right. You don't do these things. They kill your deal. And if they don't kill it, they significantly delay the process in doing it. Yep. So it's, communication is important.
Absolutely. And then other challenges are basic types of challenges where the borrower might be going on vacation, because obviously it's summer right now, and they don't let us know that they're going on vacation, and then it's during the week before closing when we sometimes need to have them sign documents. But in terms of credit qualifying, it's mostly been the cash. It's mostly been on the credit end, and undisclosed debt. These are things that are coming out there now that Fannie Mae, Freddie Mac, and some of the other lenders that the governmental underwriting guidelines are requiring us as lenders to review. So we just had one where a person had a timeshare that they bought cash, but the timeshares have a monthly fee that they have to pay, and it's not showing on their credit report.
Ah, true.
So when we pull the credit, the timeshare is not showing on there, but they're still paying a monthly fee to them. So that has to be included when analyzing their debt. If a loan officer is not looking at the bank statements and everything of that sort up front, you're not going to know to add that, and that little amount can make or break your deal.
Okay. What about the FHA? Still struggles out there in helping people find places that FHA is approved, right?
Well, I'm going to be one of the people that will go out there. I'm a big advocate of FHA.
Okay.
Personally, as a lender end, I prefer FHA over conventional sometimes because they have there's a misconception out there.
But they're more lenient as far as qualifying.
Right, more lenient as far as qualifying, but the condition of the property is the same whether it's conventional or FHA.
True.
Or VA. So if there's a stain on the roof, you're not going to be able to close whether it's FHA, VA, or conventional because that might be a leak.
True.
Or something of that sort. And that's a misconception that people are having out in the market where they may say a single family home or a townhouse is not FHA approved. Well, the first thing that I do when I see that on a listing agent is I pick up the phone and I ask the listing agent, why is it not FHA approved? And sometimes they'll say no appliances, or there's an issue with the plumbing, or the windows are broken. Well, it's going to be a challenge regardless of the type of financing that you go with.
So one of the misconceptions about FHA is that it's for first-time home buyers.
It's not.
Okay. So what are the restrictions? You can't have more than one FHA loan at the same time.
If you're local. But if they let's say somebody has an FHA loan and they're transferring from New Jersey for work over here,
okay,
they can go ahead and have that as long as they can go ahead and document that it's a transfer, and they can have two FHA case numbers open at the same time.
Okay.
Yep.
Good to know.
And it's not for first-time home buyers. It could be for somebody who had a credit event that, on a conventional loan, for instance, there's a waiting period for foreclosures, bankruptcy, and let's just use a 7-year waiting period for foreclosure. Where in FHA, it's not the 7 years. It's a 3-year waiting period for foreclosure, a 4-year waiting period for foreclosures, where they can go ahead and apply for an FHA loan. Somebody who already owned a home, so it's not for first-time home buyers only.
But the challenge, and this can be addressed to both our types of audiences, that a lot of agents, when they're entering properties in the MLS, will always put yes to cash, yes to conventional, and yet they put no to FHA and VA, and oftentimes they're doing it for all the wrong reasons.
Correct.
Okay, so reason number one is, well, the property has some kind of unpermitted work, so there's no way it's going to get FHA approval. Well, guess what? It's not going to get conventional approval either.
Exactly.
Okay, so agents, you got to be very, very careful to exclude properties without, obviously the seller is the boss. The seller says, I don't want VA, I don't want FHA. But when you're just deciding for them without, you are crossing over some serious lines there. Because one can argue that in some respects you're alienating or even potentially discriminating against a particular type of buyer.
Right.
So, unless the work is just not going to be, what other reason can you think of that someone would not allow or at least consider an FHA offer?
Well, it's mostly due to the miseducation.
Okay.
So and not only FHA, but keep in mind that VA is also another one there.
Absolutely, we go through that all the time.
VA is, especially knowing in your office with Milres and the importance that veterans play in your life and in my life as family as well. We have to educate, especially if you're on the listing, and you have to educate your seller. And some of them say that they don't want to do a VA loan for misconceptions in the past.
Yeah.
A seller will have to pay for a clear termite inspection and any closing costs that exceed the 1.5% of the total fees in there. However, that's something that we can go ahead and talk about offline as well, some more. But VA is another great instrument.
Fantastic program.
A great program out there, and too many people are misinformed. So if you're a listing agent and you have a seller who is not open or is saying, oh, I heard X, Y, Z about FHA or VA, and you want to tell them, let me get you more information on that and give me a call and we can talk through that, please do. And then you can go back to your seller, educate them, and explain to them why you want to open it up to a whole new slew of buyers.
So let's do this just to make sure, because there's so many ideas running through my mind right now, but I want to make sure we get to as much of this as we can before the show's over. I definitely want to come back to the VA, so remind me to come back to the VA. But to kind of close out on the FHA, the challenge is if the person's budget, if the approval amount only allows them to look at condos and townhouses, those have to be approved. They have to be on the list of condos. But townhouses that also have a condo legal description have to be on that list as well.
Correct.
Okay, the list is a short list.
Very short list. I think there was 8 in the entire, 5 in Broward County and 8 in Dade. So we're looking at 13 FHA approved condos.
Not much.
In Dade.
Okay.
Right.
So weren't there some plans, governmental plans or incentives to go ahead and increase the number of that? What happened to that?
They're working on it.
Okay.
FHA, I know there's a lot of at the NAR, the National Association of Realtors, are lobbying for that. I believe next week MAR is going to be taking place. Not MAR, but NAR is having their FAR.
That's the Florida Association of Realtors.
Is having their big event in Orlando, and I know that they have a group of individuals who are going out there to try to talk to FHA about loosening the restrictions for condo financing, because that's such a huge market that they're missing out on.
Yeah.
So yes, condos, they're a challenge for FHA, and whenever I see that on a listing, the first thing I do, especially in Broward County, is I go to the BCPA, the Broward County Property Appraiser website. I look at the folio number, and if the folio number has a letter in it, it's a condo.
Okay.
So if it's a condo, then I understand why it's saying not eligible for FHA. But if it's a townhouse or a villa and it doesn't have that and it's showing as a regular townhouse, lot and block townhouse, that's where I make the phone call to the listing agent and find out why.
All right, so let's say it's not on the list. Then let's think options, right? Can we go maybe conventional with 3% down?
There are programs out there for the 3% down on the conventional end. The biggest challenge that we're seeing right now with condos across the board on the conventional end has nothing to do with the buyer being able to qualify. It's the challenges with the condo and the HOA itself.
And the reserves.
There's a couple other things aside from the reserves is the biggest challenge that we're encountering right now. A lot of the condos out there, for some reason or another, they're opting to not maintain a 10% reserve of their maintenance fee income. So as per lending guidelines on Fannie Mae and Freddie Mac, they require a 10% reserve account for their maintenance fee income that they generate. If they don't have that 10%, then we automatically have to try to seek some other options for them. So that's the first thing that we do as well when we're dealing with clients who are buying condos. We take a look and we reach out to the HOA immediately to find out and ask for a copy of their budget. We ask for a copy of their master insurance certificate. Another big thing that's being scrutinized and that is happening out there are those condos that have very few units in there, a 40-unit condo complex of 50, 60. We have some people in there who own 4, 5, 6, 7 condos, one person. That's a challenge in there. If one entity owns more than 10% of the units in there, then it becomes a non-warrantable condo for conventional financing, and then we have to look into other options as well.
One of the things I'm going to recommend, especially for those that are in Vince's immediate area, you put on an incredible condo financing class. And I think it's imperative that whenever you're putting on one of these classes, people attend, and you can bring those classes out to real estate agents and real estate offices.
Absolutely.
So why don't we go do this? We'll give you your contact information more than once, but you're going to give them your personal cell number?
Absolutely. My personal cell number is 786-208-8112. My email address is vincent.rodriguez@caliberhomeloans.com, and my website is www.vincecloses.com.
Woo, vincecloses.com. Man.
Trying to be slick like Tony.
Oh, you could try, but it takes time. It takes time to make. So as far as VA, something I'm very passionate about, and you mentioned MilRes, and for those of you that don't understand what that is, I'm very actively involved with a real estate certification called the Military Residential Specialist, MilRes. And its goal is to educate real estate agents on everything that they need to know to effectively work with both active military and veterans in the purchase of their home. And only about 11% of eligible veterans ever use their VA loan program benefits to purchase a home. Now, in some cases, it's not the best loan for them. But too often, the reason why they don't use it is because they're lacking in education, and the real estate agent that's representing them does everything they can to talk them out of the deal.
Right.
So, or you may have a very, willing agent to represent the buyer, but they come across a seller that refuses to go ahead and work with someone in a VA purchase, and the agent representing that seller isn't up to speed on why it's a good program. Right. So listen, folks, there's no excuse. There's no excuse. If someone is or has served our country, they have a right to at least explore the options with the VA loan program. And so if you're lacking in training in that area, get it. And as Vince mentioned, to the seller, it's really just real estate 101. There's only two scenarios that can potentially affect them. One is that the buyer may not pay for the termite inspection.
Right.
Okay? Right. So what does that even cost? $100, $75? There's companies out there that'll do the termite inspection for free.
Yep.
All right, so I don't think that's a big deal for a seller to go ahead and take care of. And in many cases, the real estate agents will say, I got this.
Right.
Okay.
Absolutely.
But what can be a big deal is the 1%.
Right.
So explain that so that make sure that there's no misunderstandings.
That is when they take the lender fees,
right,
as well as some of the title costs, and if it is over the 1%,
the origination fee.
Correct. Whether it's not just the origination fee, but any lender's fees, which could be the underwriting, processing, underwriting and processing fees that the lender charges,
right,
as well as some of the closing fees by the title company and some other title-related fees. If it is over the 1%, then the seller has to partake in a portion of the closing costs at that point. We see that happening in the lower price points, if you will, sometimes at the $150,000 and lower for the VAs who are purchasing in that. But if we're talking about a $200,000, $250,000, $300,000. I mean, our lender fees are very, very low, so I don't really.
It's not an issue.
It shouldn't be an issue.
But so we want to make sure that people understand this. If you're a real estate agent representing a seller, okay, someone is introducing a VA offer to you. If the purchase price is, say, $150,000, the most that the lender can charge in origination fees, which encompasses several items,
right,
is going to be $1,500. So that amount cannot exceed that.
Right.
So if you have to look at the estimate of charges that the lender has provided to the buyer,
right,
and if you have a lender out there that's charging, I don't know, $3,000,
and the seller's on the hook for
$1,500.
$1,500.
Mm-hmm.
Right.
Right. So at that point, you're going to say, wait a minute, time out. This is not going to be the best situation for my sellers.
Correct.
Now, the minute you're talking price points that are $250,000, $300,000 or more, it should be a non-issue. But I think that threshold number you mentioned, $150,000, is about right. That could be something. So that's the one area that a seller needs to be protected on.
Right.
Because if you're not protected sellers, the difference between that 1% and what the actual amount is, you're technically responsible for.
Right.
Okay.
We don't we don't want them to be afraid that, there's some people that think that because the appraisal is attached to the property for X amount of time, or it takes longer to appraise, or it takes longer to process. That's not necessarily the truth.
The appraisal part, you have a lot less control of.
Right.
The appraisal part in a VA can take 10 days.
Right.
All right. And that's about the one area that every legitimate lender is going to tell you, listen, I have zero control over this. But I know that you can get loan approval on VAs in under 15 days, under 20 days. You can close in 30 days.
Absolutely.
You do it all the time. So let's kind of recap there. Depending upon where you're at on your qualifications, if you are now thinking about buying a home, we keep going back to the very first thing you must do, besides contacting a real estate professional, is to sit down with a mortgage professional. Listen, no real estate agent worth their salt is going to put you in their car or meet you at a property to go look at homes if you're not pre-approved.
Correct.
Okay, you are way ahead of the game. You're putting the cart before the horse.
Absolutely.
You want to sit down, you want to get pre. Now, I, representing a buyer, if my buyer has met with you and you've given me a strong pre-approval, I now have that to send along with the offer.
Right.
Because a good listing agent won't even present the offer to their seller that is not accompanied by proof of funds or pre-approval.
Correct.
So listen, where the rubber hits the road, they need to talk to us and they need to talk to you, and we need to be working together.
Absolutely. All day, every day.
Okay. Now, you have to accept what the numbers tell you. Listen, if all you can afford now is this number, then that's it. So I have my production crew giving me that worried look.
Okay.
We're good?
We're good.
We're not good? You can talk.
We're fine.
Okay, thank you. So, because when you have both of them going like this, you're going, oh, okay.
Wondering what's going on.
Yeah, what's going on there? I'm always like, okay. So, but people have to make intelligent buying decisions. Absolutely. They need to buy within their approval. No. Oh, thinking about approval. FHA loan limit is what in the Tri-County area of Florida?
FHA loan limit is $345,000.
Okay, $345,000.
In the South Florida area, Dade, Broward, Palm Beach.
Okay.
Fannie Mae's loan limit is $424,100.
Now, the $424,100 also applies to VA loans as well.
Correct.
So, yeah. So, hey, you know what's also cool about VA loans? A lot of people don't know about, but they can actually get a loan up to $1 million.
Correct.
And a lot of people think, oh, I don't want to work with VA. Those are lower price homes. And I go, you're crazy. We're talking about a 424-1 loan limit. And so give me a scenario. How can somebody buy $1 million property using a VA loan?
Whatever the difference is between the 424-100,
okay,
they're going to have, there's a certain amount that they have to put down. That
25% of the difference.
25% of the difference. So we're looking at that in terms of the down payment. So somebody could buy $1 million home, and let's just use easy numbers.
Yeah,
simple,
yeah.
You know,
I'm not a numbers guy.
$500,000 down on 25% on that is what, $125,000. So on $1 million home, they're going to be financing $875,000. So that's sometimes what? How much is that down? That's nothing. That's barely 12%.
Yeah, it's amazing. So you're talking about what are interest rates right now on VA?
On a VA, assuming we're talking about in the fours, low fours.
Low fours. So you're talking about a jumbo-sized loan without jumbo rates.
Right, without jumbo rates.
Without
PMI.
no PMI.
No PMI.
No prepayment penalty.
Prepayment penalty.
So all they have to do is have 25%, because if they're eligible, on the first 424-1, it's 100% financing.
100%.
And then on the difference between the 424-1 and whatever that purchase amount is, 25% of that difference is what they have to have in cash. And look, there's a lot of folks, professionals, entrepreneurs that served our country, have this benefit, but also have the resources to buy a very expensive property.
Right, absolutely. And it's a great tool to help out in the financing and that. And also, I'm just throwing it out there, if anybody's working down in the Keys, the conventional loan limit is $625,000.
Yeah, so that's even more.
So
we only have a few minutes left, but earlier you mentioned something about guidelines that changed. What's the deal on guidelines?
So right now, Fannie Mae, effective July 29th, Fannie Mae noticed that they've been missing out on that first-time home buyer part, because a lot of times they had their debt-to-income ratio capped at 45%. Where FHA, you can go as high as 56% on the debt-to-income ratio. So a lot of people have been, Fannie Mae and Freddie have been missing out on that end. So Fannie Mae is increasing their qualifying debt-to-income ratio from 45 to 50%. So now they're going to be able to capture that part of the buyer that is going and having no choice but to go FHA, because their debt-to-income ratio was at a 47 or a 48%. Where they had to go FHA because FHA would allow that debt-to-income ratio and Fannie Mae wouldn't.
Excellent.
Yep.
Excellent. So, Vince, one more time. How about this? In 30 seconds or so, make your best argument why in such a crowded marketplace where there's so many different lenders, why Caliber, why Vince, and then give them your contact information again.
Sure. It comes down to one thing, and it comes down to service. That's what we pride ourselves in. That's what I pride myself in. I work with you as a real estate professional. If you're working, I'm working. If you're a client and you have a worry, I have a worry. So if you're out there looking for homes, I'm the person that is going to be able to be available through phone, text, email, when you're available, whenever you need it. Caliber, we have a huge network of real estate agents that we work with, a huge network of clients that we work with, and the fact of the matter is that we have local processing and underwriting right here in our backyard. You don't have to worry about having to speak to somebody outside of the state of Florida. Our main processing hub is located right here in Plantation, so we have a great team of processors, a great team of underwriters, and we have speed. So aside from the service, the communication, and the speed, our goal is to partner with you. We're a reflection of you on the real estate community. We want to partner with you, and we're an extension of your business. So if we don't do well, we don't shine, then you don't shine. And our goal is that everybody shines together.
So how about this? As far as your personal involvement on a transaction, you can cover the state of Florida.
The entire state of Florida.
Okay, because people are listening and watching this show from everywhere.
Right.
So if you've impressed them enough that they want to give Caliber an opportunity,
right,
where should they go to find their local Caliber rep?
They can actually call me directly, and I can put them in contact with a local Caliber rep outside of the state of Florida. I can manage the entire state of Florida and finance in the entire state.
Okay.
But if they're outside in, let's say, Georgia or North Carolina, which is a big place where people are buying, I have contacts at Caliber there, so you can contact me, and then I can put you into contact
So you're the good
somebody.
first point of reference.
Absolutely.
Okay, so your personal number one more time.
Personal number is 786-208-8112, and my email address is vincent.rodriguez@caliberhomeloans.com, and website is www.vincecloses.com.
I like it. All right, so folks, as we're winding down, one of the things that I've always tried to do is make this program as educational as possible and non-commercial as possible. But I have a responsibility to my team, to my office, to my family, to make sure that we are not leaving any stone unturned when it comes to how we can help you with your next real estate purchase or real estate decision. So just kind of put it all in perspective. I'm the broker of Xtreme Realty team. We are actually a group of 3 companies. We have Xtreme International Realty, which is out of Brickell, Florida. We have Xtreme Realty Team Highlands County, which is in Lake Placid, Florida. Yes, there is a Lake Placid, Florida, just 2 hours north of Broward. And the main hub is Xtreme Realty Team here in Davie, Florida. So all of your real estate needs, whether it's buying, selling, renting, investing, we would love an opportunity in the markets that we service to go ahead and have the opportunity to show you why we're the best company for your needs. If you are in another area, if you're a real estate professional watching this from California, someplace else, and you're thinking, you know what, there's something about that guy, there's something about that company. When you have a referral in any of our market areas, we would certainly appreciate and welcome the opportunity to service your customer. And of course, we're going to pay you a very aggressive referral fee. The other thing I want to touch on is if you're a real estate agent watching this, it's probably for one reason, and that is you're probably not having access to this type of training where you're at right now. So I would be remiss as a broker if I did not send a message out that we're always looking for qualified individuals that can come on board, contribute, and help us to grow what we feel is a very special model here. We're not the company for everyone. I'm never ever selling an agent or bringing an agent on board because we're the biggest or the fanciest or anything else. We have grown because we are committed to being the best when it comes to training. I'm doing battle with the franchises. I'm doing battle with the 100% shops. I'm doing battle with huge independents and little old Xtreme. How have we grown like we have? First and foremost, I give all the glory to God, because without Him, we wouldn't be here. But behind that, you know what? We under-promise and we over-deliver. So if you're not happy where you're at, if you want to explore some other options, I would welcome the opportunity to sit down with you and see if it's a good fit between us. So that is Xtreme Realty Team. And look, there's our domain name. You can't miss it. By now, it should be like here. But is that a cool name or what? And quit looking at the clock, okay? The time is over when I say it's over. Anyway, so what happens is, can you get a more cool name? No, you can't say because you have other customers, so I'm not going to put you in the spot.
But you know what? At the end of the day, I'm going to plug it in here anyway.
Okay.
We've been working together for what now? About a year and a half?
Yeah.
And we started because, you know, we hit it off.
Yeah.
First day we met, we were sitting over here.
Yep.
And one of the things that I will plug about Tony is the thing is that he gives his agents support, and you really care. You're a servant leader. You're not just a person who's coming in and saying, hey, hang your license with me, now go out and sell homes. You care about your agents and you care about your partnerships, and that's why, you know, we've stayed together here for a year and a half, and we're growing. And that's why you allow me to be here. And one of the things is when I have people that I can refer back, I trust you to do the same way. So, you know, Tony, you got a great heart. You're a great servant leader, and, you know, and I'm not just saying that. I've experienced it myself. So
thank you. Well, folks, there's our website address. The number, you know, I'm going to do something I haven't done. I'm going to give you guys my personal cell number. I'm going to give you my number. So if you just want to call me directly, whether a consumer or an agent, call me at 954-663-0275. One more time, my personal cell number, 954-663-0275. We'll talk about anything, whether it's suggestions for the show, issues you're going through, anything. We want to be an open line for you. So Vince, thank you so much. You brought such great content to the show, but more importantly, the integrity, the commitment to service that you and your team bring to the industry. It's not unnoticed, brother, and it's certainly not unappreciated.
And thank you for having me.
All right, man.
Thank you for letting me represent Caliber.
Thank you.
And thank you.
All right, folks. Well, listen, next week technically is vacation, so we may or may not have a live show. You never know. But either way, folks, thank you for sticking with us, being a part of our audience, and we'll talk to you soon. Bye, Facebook.